Hello everyone and welcome. I'm Oriel Morrison-Higgins and I'm joined today by Keith Bowes, Managing Director and CEO of Future Metals. Keith, welcome. Thanks for joining us today.
No, thanks very much. It's great to be here.
You're keeping yourself busy, Keith, at the moment. For investors, can you give us a little bit of an update as to where your focus is right now?
Yeah, sure. So Future Metals, fairly recently I joined the company. So I've been in the seat for about 7 or 8 months now. And really the focus around the company is on our Panton PGM project. So I think if the audience is aware of what's happening in the PGM market at the moment, at least in the beginning of the year, there's certainly been an uplift with regard to the PGM pricing. And certainly our Panton project, which I think has got some really unique characteristics to it, is well situated to take advantage of this new PGM pricing coming through.
You've actually had a fairly good run on the stock market yourself because your stock jumped around about 21% or so on the back of your updated resource estimate. So can you give us a little bit of a rundown as to what you announced?
Yeah, sure. So there's always been a resource for the Panton project. And the previous resource was really based on what I would call a traditional geological resource, and that it had associated cutoff grades with it. But what we've done, because we're very much focused on developing this project, we had a look at the old resource and decided we could update it by including some economics around it. So people familiar with the JORC code will recognize the realistic prospect for eventual economic extraction is one of the parameters that we've applied to the resource now. So by incorporating the cost information that was generated back in 2023 when a scoping study was done for the project, and obviously the new PGM pricing that we're seeing at the moment, we've applied that to the resource now, come up with whittle pit shells, come up with stope optimizations, and the resource that we announced to the market is now constrained within those shapes. So therefore we consider this to be an economic resource that we think is a good basis for us to start the development strategy. So if you look at the numbers there, we're talking around 82 million tons at 1.4 grams per ton of platinum equivalent for about 4.3 million ounces of platinum equivalent. And I specifically use the term platinum equivalent when I talk about our deposit because the PGM mix at Panton is highly biased towards platinum. There's a lot of other PGM projects out there that are heavily weighted towards palladium. Our deposit has a much higher content of platinum associated with it, and hence the reason why we always reference a platinum equivalent calculation in our resource estimates.
So you've been talking about the PGM or the platinum group metals. As you've sort of indicated, they're getting a lot of attention on a global basis at the moment. So how does that actually change the conversation around what you're doing around Panton?
I think, the market for PGMs is certainly changing. And I think there was a period of time, maybe 2 or 3 years ago, when everyone was talking about electric vehicles. And I think the most well-known use of PGMs is in autocatalysts for internal combustion engines. And certainly there was a perception that because of everyone moving away from the petrol engines or diesel engines to electric vehicles, the demand for platinum group metals would diminish significantly. That hasn't really happened. And also we've seen that instead of moving directly to electric vehicles, the preferred new vehicle out there at the moment is actually the plug-in hybrid. And the plug-in hybrid still has the internal combustion engine. It still needs the autocatalyst associated with it. And therefore platinum and palladium is still in high demand for those vehicles. I will add an extra thing as well, is that when you look at the PGM market and you look at the palladium, you look at platinum and you look at gold, palladium has the highest use in autocatalysts and specifically for petrol engines. Platinum's got a more diverse demand side in that it's also not only used for the autocatalyst but more on the diesel side rather on the platinum side. It also has a number of industrial applications. It's also used in jewelry, and we're also starting to see people buy platinum for wealth storage as well. So having a much higher grade platinum deposit, we think is an advantage over some of the other PGM players out there at the moment.
What does that higher grade mean for the economics of the project there, Keith?
Well, if you're looking at your PGM mix now, and even today where we've seen prices come down on the back of the US-Iran issues, you're sitting in the platinum sitting somewhere between $1,600, $1,700 US an ounce. while palladium's more around the $1,200 to $1,300 per ounce. So obviously having a deposit that's got higher platinum grade in it, there's obviously higher revenue streams coming out of that, more significant platinum contribution to the deposit.
Now, you are planning an updated scoping study at this point as well, Keith. So what could we expect to hear from you and when?
So there was a scoping study that was done for this project back in December 2023 that was announced to the market. And that scoping study showed some really good results from it. However, the platinum and palladium prices were depressed at that point in time. And if we have a really brief look at the economics there, what they call the basket price for the product that is produced from the operations was around $1,550 per ounce. So that's like a blended mix of the PGMs coming out in the product. What we've recognized, obviously, with the increasing price in platinum, the increasing price in palladium, and of course the huge increase we've seen in the gold price since that period as well, is that the basket price now sits above $2,000 per ounce. And we believe that's going to make a significant difference to the economics of this project. So that's the one thing we wanted to bring back to the market's attention, is how the PGM pricing is going to impact our project as well. But I think there's also something really interesting that we've been working on over the last 6 months as well, is that when the scoping study was delivered to the market back in 2023, it considered what we would call a greenfield project. So there was an open pit mine, an underground mine, the processing plant, everything was located on the existing mining leases on which the deposit sits. But we've had a number of discussions with Zeta Resources, which owns Panoramic Resources, which in turn owns the Savannah nickel plant. Now, the Savannah nickel plant has been on care and maintenance for the last 2.5 years or so, and that plant is only 60 kilometers away from the Panton project. And we believe there's a real opportunity to mine the Panton material and then truck it to Savannah and treat it within the Savannah plant. So the Savannah plant is a nickel concentrator. It has, it's very, very similar to a PGM type concentrator as well. And in fact, back in March and April of this year, we sent a team of engineers up to Savannah to do an inspection of it. And we're very, very confident that we can not only refurbish that plant, but we can modify it to become a PGM concentrator with a much lower capex than what was issued to the market back in the, with the scoping study back in 2023. So we see a real low capital option in front of us. We also recognize, because of course the plant's been built, there's a tailings dam, there's a camp there, there's access, there's power and all those types of things. Potentially the time or the delivery time or the execution time of this project could be significantly reduced by going down that route as well. And those are really the things that we want to be looking at with the scoping study. Having a look at the Savannah option, comparing it to the original Greenfield project that was presented back in 2023. But also the team over the last 6 months has spent a lot of time going through the historical data, and there is a lot of historical data on the Panton project, because it's been around since the early 2000s. 2001, 2002, there was actually a bankable feasibility study done for the project. So we've gone through all of that historical data, and we believe there's some additional opportunities available to us that we think can reduce the capital even further. And that's really the basis of this new scoping study, how best to be able to set this company up to be able to bring the Panton project into production with the lowest capital and within the shortest period of time as well.
Well, we certainly look forward to hearing what you find. Keith, thank you so much for taking the time to chat to us today.
No, great. Thanks very much. It was great to talk to you.